Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and overall, year-over-year mortgage fraud is down. However, in one area specifically, mortgage fraud is absolutely surging. And also, I want to ask the question, is mortgage fraud more predominant in the most unaffordable metro areas and in the metro areas experiencing the biggest price decline? So these are the things that we are going to explore today, because one thing we know for sure is fraud is bad. But just where is all this fraud happening? But remember, you guys, I am not your financial advisor. Even if I want to be, even though my bio is as realtor, loan officer, instructor in Texas in real estate, I'm still not. This is my personal YouTube channel where I get to be a father, a renter, a husband, someone that's frustrated with this housing market. So please, guys, like this video, subscribe if you haven't already, and don't leave me hanging, guys, and I'm serious. Shoot me a comment below, and I would really, really appreciate that. Let's get started on this article and read right now. Now, this is a CoreLogic report, and I'm going to bring some charts up after we're done reading this article, but this is Q3 of 2022 quarterly mortgage fraud brief. So we're going to jump right into this right now. Now, this is the mortgage fraud brief, quarterly mortgage fraud insights, again by CoreLogic. It will be linked in my description. The CoreLogic National Mortgage Application Fraud Index for Q3 of 2022 is 122, with no change from the prior quarter. The year-over-year trend is down 2% from Q3 of 2021 when the index stood at 125. Overall, application volumes continued their decline in Q3. Purchases made up 75% of the transactions, the highest level since the inception of our index in 2010. Within the purchase segments, jumbo and investment purchase volumes were down, but government, FHA, and VA purchase volumes increased. Also, another one is USDA. That's a good loan. Risk levels for most segments were stable from the last quarter, with one exception. Multifamily purchases, or 2 to 4 unit properties, showed a significant risk increase, with a higher percentage of multifamily transactions scoring in the highest range. The primary risk issues seen in these applications was occupancy concerns, where occupancy as a primary residence appeared unlikely given superiority of their current residence, meaning their current residence is way better than the multifamily. So let me explain what all of that means. So there is a significant increase in mortgage fraud when it comes to essentially investors purchasing multifamily houses. And what they're doing is purchasing these homes as their primary residence because, and if you purchase a home as your primary residence, the loan terms are much more favorable. For example, on an investment property, you have to at minimum put 20% down, and your interest rate is usually much higher than if it was a primary residence. When you get a primary resident loan, usually the down payment is only 5%. So in other words, these investors are getting desperate, and there is a massive surge in house hacking fraud, essentially. So they want to purchase those houses. They're telling the lenders it's a primary residence. The lender is saying, no, it's not. You have a 5,000 square foot mansion right down the street. Why on earth would you downsize? Do y'all see that? It's really easy for them to tell what fraud is and what fraud isn't. But now let's look at the top 15 locations on where fraud is increasing the most. And I want to kind of explore, where is the fraud happening the most? Okay, so first, in order to do that, let's look at the top 15 areas with the highest level of mortgage fraud. And here's the chart right here, guys. And I kind of want to just highlight a couple of things here. Now, this is in order from the greatest fraud risk to the least. So the number one fraud risk metro area is Miami, Fort Lauderdale, and Pompano Beach, Florida. That's crazy. So the highest fraud actually happens in Miami. So to me, I was actually a little bit surprised of that, but I also want you guys to look at this surge. This is a quarter over quarter measurement. So in Norwalk and Stanford and Bridgeport, fraud increased 18% quarter over quarter. That's astonishing. And also look here, San Francisco, Oakland, and Berkeley increased 15% in fraud quarter over quarter. Also, which is interesting, is look at McAllen, Edinburgh, and Mission, Texas decreased, you guys, decreased 23% in fraud risk, yet they're still ranked number 13 in the entire nation for fraud. So in other words, there's a lot of crazy things going on here. But I thought it was really interesting to point out that Miami is first, and we got some other ones on here that ring a bell. Look at New Orleans is on here. Houston is somehow on here. Los Angeles, Anaheim, San Francisco, we covered, Providence, San Jose, Santa Clarita. So these are the top 15 metro areas. So keep those metro areas in mind, because now what I'm going to bring up are the top metro areas with price decline, because I believe we're seeing an abundance of fraud in areas where people are getting a lot more desperate and things are getting a lot more unaffordable. So I'm going to start by pulling up the top 10 metro areas with price decline. Let's see if anything matches list to list. All right, you guys, so you can see immediately I've highlighted 3 metro areas on this list that are in the top 15 metro areas with fraud. And what's very interesting, so this goes from greatest to least, all right? So it's essentially saying that San Jose and San Francisco have the biggest amount of price decline. And I highlighted these because both San Jose and San Francisco are on the top fraud metro area list. Now, the only other metro area on that list is Los Angeles. So what we have here is the first, second, and 8th metro area with the top price decline that are on the top 15 fraud metro areas. You know, so already I'm starting to see maybe there is an impact on price decline and fraud, right? But look at this. Now, this is the chart with the least affordable markets, and it goes, you know, it starts as first place is on the bottom. So number 1 least affordable market to live in is Los Angeles. Now, I highlighted that because Los Angeles is on the fraud list. And also number 3, San Jose, number 4, San Francisco, and number 6, Miami. And Miami is the top metro area with fraud. So we can see right here, according to the charts that I just pulled up, the top metro areas with price decline and the top metro areas that are unaffordable all make that top 15 fraud list. So personally, I think that's pretty intriguing, guys. So the question is why is that? And what does that really mean? So in conclusion, we can see that investors, whether they're beginner or not, are starting to get desperate, so much so that there is a surge of fraud in multifamily residences. And it also appears there's more fraud, the more unaffordable things get. Now, overall, this is a very dangerous level of desperation that we need to stay far away from at all costs. You never cut the corners when it comes to making the biggest financial transaction and decision of your life. So stay away from people that are cutting the corners and that seem shady. Now, other than that, you guys, I really hope you guys got some value, some insights, and some perspectives from today's video. And if you're out there investing in real estate, I do wish you luck, and I hope you win.